Time now for our Wall Street Week daily segment. The host of Wall Street Week, David Westin, joining us as he does every day at this time. And David, as we close out the first half of this year, I think there are a lot of surprises here in just how resilient the economy has been. Yeah. But there's still one big question mark out there, and it surrounds commercial real estate.
It does. That's the thing we keep hearing about, the problems in commercial real estate. And one of the companies that's very, very big, has been known to be big in commercial real estate, of course, is Blackstone. And we got a chance to sit down with Michael Chae. He's the chief financial officer. And we talked about his business overall, but we started with commercial real estate.
When you see the acronym CRE in a newspaper article, you can be sure it's probably going to portray the sector and paint it with a broad brush. And the reality is, there's real bifurcation in terms of the dynamics in the in real estate as an industry. It's a big industry. You have one sector, traditional office, especially in the U.S., that really does have fundamental challenges and vacancy levels of 20% plus and so forth. That happens to be a very small portion of our portfolio, less than 2% of our global real estate equity portfolio. And then you have a number of sectors where, fortunately, we're concentrated through, I think, some good sector selection decisions, like logistics, data centers, a number of areas in rental housing, life sciences office, where the fundamentals are really quite good. Vacancies in many of those sectors are at 2 to 5%, which is almost at or just above the frictional level of vacancy. You know, market rents growing at double digits in a number of those sectors. So it really matters where you invest. And the portfolio construction I think our firm has created in real estate over the last decade are really, some of our finest work as a firm.
You've got a big company and you're buying and selling all the time, but there have been some recent reports of some selling in the real estate area, particularly some warehouses. If you look at your portfolio overall, would you say you're a net buyer right now or seller of real estate in total?
I went through in my litany of the deals we've done that to your point, the fact that even in the last month we sold a big portfolio of logistics and we bought 3 others. By the way, $3 billion is in relation to having a portfolio that's $100 billion plus. So it's our business, and given different strategies with different time horizons and sort of return targets, to be in the business of buying and selling when it makes sense. Never forced to do it, but we can be opportunistic, again, both on the buying and selling side. And so I wouldn't say we're net buyers or sellers one way or the other.
Artificial intelligence, particularly generative or large language model artificial intelligence, very much in the news these days. Start with Blackstone. What difference might it mean for Blackstone's operations before we get to the investment in AI?
Well, it's a really good question. Obviously, a lot of focus, and we've been focusing on the potential in this area for a while. I'd first, just big picture, say that I believe AI will reinforce and further the advantages of private market investing relative to public market investing.
Why is that?
Well, I think the reason for that is it's actually pretty simple. Public market investing, which relies obviously on publicly available data, that sort of data will be increasingly and further commoditized in an AI world. And in contrast, the value of proprietary data and insights that you can glean from a really large private market portfolio accumulated over many years across many businesses, the value of that sort of information and data and ability to mine insights from that and have pattern recognition coming out of that, both longitudinally and across your business, that will only be further enhanced, again, relative to public market investing. So I think that is a big picture perspective. For us on our business, you mentioned this, first operationally, I think for sure over time, there'll be efficiency gains in our business processes and our operating processes from leveraging these tools. And then on the investing side, which you were getting at, obviously lots of focus. You could say there's a bit of a gold rush mentality right now.
As CFO of Blackstone, you're looking not just at the here and now, this quarter, next quarter, but the longer term. Take us into the longer term future for Blackstone. I mean, you're very, very big right now by most measurements. It gets harder to grow at the same rate as you get bigger. What is the path forward for Blackstone to maintain the sort of growth that it's had so far, which is remarkable?
And it's a fair question, but I'd also say that's a question that we've been hearing for years about, hey, you've gotten to this size, where will the growth come from here? And I think we've sort of proven ourselves on that front. But to answer your question, I'd step back and say our firm has been around for 38 years. I've been fortunate enough somehow to be there for 26 of the 38 years. We have a very long-term view on building the business. We don't just want to be a very good asset management company. That's in addition to that. we want to build really one of the great companies in the world that is very enduring. That is Steve Schwarzman's vision, and it permeates, our culture and everything we do. So I'd say that's the backdrop. And against that backdrop, there are some really profound secular tailwinds that continue to sort of power the future of our business. And it's both with respect to markets that we invest in and also the markets from which we raise money to invest. And so on the former, there's really an amazing long list of addressable market opportunities. I just tick off a few of them. Globally in private credit, globally in the infrastructure area, in energy transition, which will require obviously trillions of dollars of capital, in the alternatives business in Asia, which is still earlier in its development, further development in the secondary market for alternatives generally, which is still underdeveloped, investing in the life sciences revolution where we have a big business. So there are some really big markets to invest in with a lot of runway that I think will create really, really big opportunity. And then on the fundraising side, the markets where we raise capital, structurally, the world's investors are still underallocated to alternatives. And so people focus on sort of traditional institutions, and there's still a lot of runway to go there. But then in other really, really big channels, like insurance, like individual investors around the world, they are really barely penetrated with respect to alternatives. And so there are a lot of tailwinds there. And we think we're the best positioned firm in the world to capture the opportunities. We like to think we're the reference institution, that we have the assets of our brand, our reputation, the scale of our platform, and really importantly, our culture. So we think we have created a culture that does both performance and innovation well. And if you had to ask me sort of what makes us special, I would say we've been able to combine being very good investors with being very good business builders and being able to institutionalize that. And that's unusual in the investment business. And that's what's powered our success to date. And that's what we think will propel our future.